Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Prediction markets are undergoing a significant structural shift. Kalshi CEO Tariq Mansour has publicly dismissed Polymarket as a primary competitive threat. Instead, he identifies CME Group and Robinhood as the real dangers. This strategic recalibration comes as regulatory scrutiny tightens globally. Mansour argues that institutional scale and regulatory compliance outweigh the novelty factor of offshore platforms. Investors should watch how CME leverages its infrastructure to capture this emerging asset class. In the technology sector, pricing power is under intense pressure. Apple CEO Tim Cook confirmed that the company will raise prices for select products. This decision directly offsets mounting costs for memory and storage chips. The supply chain constraints are no longer a temporary blip. They are a structural cost driver impacting Apple margins. This move signals that tech giants are prioritizing margin protection over market share growth in the short term. On the macro front, global growth indicators are flashing mixed signals. New Zealand's March quarter GDP growth slipped to a range of 0.7% to 1%. However, the outlook is darker. Westpac warns of a potential contraction in the April-June period. The fuel crisis is biting hard into household budgets and business operations. This data point serves as a leading indicator for commodity-dependent economies facing energy inflation. Corporate earnings are now the primary test of Fed hawkishness. Accenture and Kroger report pre-market Thursday. Their results will reveal how much enterprise IT spending and consumer discretionary spending can withstand higher rates. The S&P 500 has already fallen 1.2% in anticipation of this pressure. If Accenture guides conservatively, it suggests a broader slowdown in digital transformation budgets. If Kroger sees volume declines, it confirms the erosion of consumer resilience. Meanwhile, the energy sector is pivoting toward technology. Schlumberger announced a target to double digital business revenue to $2 billion by 2030. This strategic pivot for the oilfield services giant highlights a broader trend. Energy companies are no longer just drilling, they are becoming data firms. This shift aims to improve efficiency and reduce carbon footprints through advanced analytics. It signals that long-term value in the energy sector lies in tech integration, not just commodity prices. Looking ahead, the market remains sensitive to any deviation from these corporate and macro narratives. With no major high-impact economic calendar releases in the immediate window, attention stays firmly on earnings guidance and regulatory developments. The interplay between chip supply costs, consumer spending limits, and energy tech adoption will define the near-term volatility. Traders are positioning for a scenario where inflation remains sticky, forcing central banks to maintain restrictive policies longer than anticipated. This environment favors companies with pricing power and strong balance sheets. It penalizes those reliant on cheap credit and high consumer confidence. That's your market briefing. Follow Rumour with AI for daily market intelligence.